The global economy is entering a period of profound uncertainty, a moment shaped by years of financial imbalances, political rivalry, and economic decisions that are now converging into a single, unavoidable reality. For decades, the United States relied on its dominant position at the center of the world's financial system, using the unparalleled reach of the dollar to influence global markets, shape international policies, and maintain a level of economic control unmatched by any other nation. But the very foundation of this dominance is slowly being tested as the consequences of massive borrowing, historically aggressive stimulus measures, and repeated cycles of money creation begin to reveal their long-term effects. Inflation has become a persistent challenge, eroding the purchasing power of millions of Americans and creating an atmosphere of instability felt across every sector of the economy. The national debt continues to climb at a speed that alarms economists who warn that the cost of interest alone may one day surpass the government's ability to manage it, placing pressure not only on financial institutions, but on the global confidence that has supported the dollar for generations. These concerns are amplified by a rapidly changing geopolitical environment in which rising powers seek greater influence and a larger role in shaping the systems that govern international trade and monetary policy. Among these nations, China stands at the forefront, pursuing a carefully crafted strategy that directly challenges the long-standing assumption that the dollar will remain the world's unquestioned reserve currency. Through calculated investments, expanding international partnerships, and a steady reduction in its reliance on the American financial system, China is building the framework for an alternative economic structure capable of attracting nations looking for stability beyond the reach of U.S. policy shifts. This movement is unfolding quietly but steadily, driven by the belief that a global economy increasingly shaped by debt and volatility requires a different foundation, one that does not depend on a single nation's political decisions or economic struggles. As America faces rising uncertainty at home and growing skepticism abroad, China's long-term approach is being studied by governments that recognize the need to prepare for a world where traditional financial systems may no longer function as they once did. The result is a subtle yet powerful shift in thinking, one that signals the early stages of a rebalancing of global economic power. While the outcome remains uncertain and the timeline unpredictable, one thing has become increasingly clear. The transformation now underway is reshaping the future of global finance, and the decisions made by nations today will define their economic security in the world that emerges tomorrow. As the financial landscape shifts, the United States finds itself confronting the cumulative effects of decades of economic choices that once seemed necessary, but now appear increasingly unsustainable, creating a widening gap between the nation's ambitions and its fiscal reality. The immense stimulus measures deployed during crises did succeed in keeping the economy alive in the short term, but the long-term consequences are beginning to reveal themselves in ways that policymakers can no longer ignore. Inflation continues to press against households, businesses, and markets, becoming more than a temporary disruption, and instead a structural challenge that reshapes how Americans think about spending, saving, and investing. The rising cost of borrowing has placed enormous pressure on government budgets, forcing leaders to confront the painful truth that every increase in interest rates magnifies the burden of servicing the national debt. This burden is not merely an abstract number on a balance sheet. It represents a growing constraint on the country's ability to respond to future emergencies, invest in essential infrastructure, or maintain the extensive global influence that has been a hallmark of American power for generations. These mounting pressures have also raised concerns around the world as foreign governments and international investors begin questioning the long-term stability of the dollar. While the dollar remains the most widely used currency for trade and reserves, its strength no longer appears unshakable, especially as geopolitical rivals recognize the vulnerabilities created by debt-driven economic policies. China, in particular, has seized the moment by advancing its long-term plan to diversify away from the dollar, signaling to the world that it intends to shape a financial system less dependent on American decisions. This strategy is reinforced by the creation of new trade agreements, currency swap programs, and partnerships designed to give nations alternatives to dollar-based transactions. As these options expand, more countries are gradually exploring ways to reduce their exposure to the volatility of U.S. monetary policy. With each passing year, this movement grows more influential, subtly encouraging governments to reconsider the role of the dollar in their financial planning. The shift may be slow, but its momentum is unmistakable, driven by a widespread desire for economic stability in a world that seems increasingly prone to shocks and unpredictability. The United States now faces an unprecedented challenge, restoring confidence not only at home, where economic pressures continue to build, but also across the global stage, where its financial leadership is being tested by both its own internal struggles and the expanding ambitions of its competitors. Whether America can adapt to this evolving environment remains uncertain, but what is clear is that the world is watching closely as the nation navigates one of the most critical economic crossroads in its modern history. China's growing influence over global finance is becoming more evident as it executes a long-term plan designed to reshape the international economic structure in ways that gradually reduce dependence on the United States, a strategy that has been developing quietly for years but is now accelerating as nations confront rising uncertainty in the dollar-driven system. At the center of this shift is China's relentless effort to expand the use of its currency in global trade, an effort supported by infrastructure projects, energy partnerships, and financial agreements that give countries practical alternatives to the traditional Western-led frameworks. Through initiatives such as the Belt and Road Network, China has extended its economic footprint into regions that have long struggled with limited access to investment and development, offering financing and trade connections that often come with fewer political conditions than those imposed by Western institutions. This outreach not only strengthens China's ties with emerging economies, but also establishes a foundation for long-term cooperation built around the yuan, enabling countries to trade in a currency less vulnerable to sanctions, interest rate volatility, or policy shifts in Washington. As these relationships deepen, the appeal of diversifying away from the dollar becomes stronger, especially for nations that rely heavily on imported commodities and are sensitive to the impact of dollar fluctuations on their budgets. China's efforts are further reinforced by the establishment of currency swap lines, which allow partner countries to settle trade directly in yuan, reducing their need to hold large reserves of dollars. These agreements, once seen as symbolic gestures, are now becoming critical tools for countries navigating a world shaken by financial instability and geopolitical tension. In parallel, China has invested heavily in developing financial institutions capable of competing with Western-dominated systems, supporting organizations that offer loans, investment opportunities, and alternative frameworks for international cooperation. These institutions provide nations with options beyond the World Bank or the IMF, marking another step in the process of decentralizing global finance. At the same time, China is steadily increasing its focus on securing access to resources that support its long-term financial independence, forming strategic partnerships with major energy producers and commodity-rich nations. These deals often involve long-term contracts priced in yuan rather than dollars, creating new channels that reinforce the currency's global relevance. For countries wary of economic pressure from the U.S., this shift represents an opportunity to reduce their exposure to dollar-based trade and consider a financial path that may feel more balanced and predictable. As this system evolves, it becomes clear that China is not merely responding to current global conditions. It is building the framework for a future in which economic power is more distributed and not dominated by a single nation's currency or political agenda. The momentum behind this transformation is driven by a growing recognition that the world has entered an era marked by instability, where large amounts of debt, geopolitical rivalry, and volatile markets have forced nations to reconsider the foundations of their financial security. China's strategy, shaped by gradual but consistent action, aligns with this global search for stability. Each new agreement, investment, or currency partnership adds another layer to a broader system designed to operate independently of the pressures created by American monetary policy. While the complete impact of this shift will take years to fully unfold, the trajectory is already visible in trade data, reserve diversification, commodity pricing, and the increasing presence of yuan-denominated financial instruments across markets. The rise of this alternative framework signals a world in transition, where nations are preparing for a future that may no longer rely entirely on the dollar as the backbone of global commerce. The resulting transformation is not just economic, but structural, reshaping how countries plan, protect their wealth, and position themselves within a rapidly changing financial landscape. As these developments continue, it becomes clear that the global economy is moving toward a more multipolar system in which economic influence is distributed across several key players rather than concentrated in a single power, marking the beginning of a profound shift in how the world conducts business, manages risk, and prepares for the challenges that lie ahead. As the global economy continues to evolve in the shadow of major geopolitical competition, the United States is finding itself in a position where the financial tools it once relied on are no longer delivering the same level of stability or influence, creating a widening divide between the country's historical economic strength and the challenges now emerging from its own internal imbalances and external pressures. For decades, America's dominance was reinforced by the strength of the dollar, deep financial markets, and the trust that international investors placed in its political system. But today, those foundations are being tested by rising debt levels, persistent inflation, and growing concerns about the long-term sustainability of government spending. The consequences of repeated stimulus injections, which once provided rapid relief during economic crises, are now becoming more visible as the accumulated debt weighs on the nation's financial credibility and limits its future options. Every new increase in interest rates makes it more expensive for the government to service its debt, creating a cycle in which the very effort to stabilize inflation threatens to further strain the federal budget, reduce economic flexibility, and increase the pressure on institutions already struggling to maintain public confidence. These domestic challenges are magnified by changing global conditions in which rival nations are developing new strategies to protect themselves from the volatility caused by U.S. monetary policy. China's steady expansion of trade in its own currency, along with its careful accumulation of real assets, has encouraged other nations to reconsider their dependence on the dollar and explore alternative financial arrangements that offer greater security against external shocks. As more countries diversify their reserves and seek long-term agreements that reduce reliance on the American financial system, the influence that the United States once exercised effortlessly is becoming less certain, raising questions about whether the global order shaped after World War II can continue to operate under the same assumptions in a world defined by rising competition and economic complexity. These shifts are particularly evident in commodity markets, where pricing mechanisms historically tied to the dollar are slowly being challenged by new arrangements that allow nations to settle energy and resource trade in alternative currencies. This trend, though gradual, reflects a deeper transformation driven by both economic necessity and geopolitical strategy, as countries seek to insulate themselves from sanctions, political pressure, and financial instability that often accompany dependence on a single currency. At home, the United States faces additional challenges as economic inequality widens, productivity growth slows, and public trust in institutions weakens, creating a landscape in which policymakers must navigate not only financial risks, but also social and political tensions that complicate decision-making. Businesses and investors are responding to this uncertainty by shifting capital into safer assets, diversifying portfolios, and preparing for a period of unpredictable market behavior that may reflect a broader realignment of global financial power. Despite these challenges, the United States remains a central force in global finance. But its dominance now requires adaptation to a world where economic influence is no longer guaranteed by historical precedent alone. The rise of parallel financial systems, expanding regional alliances, and the growing desire of nations to control their own economic destinies collectively signal that the global balance is shifting, not in sudden dramatic swings, but through steady adjustments that make each year look slightly different from the last. As these developments unfold, the future of global finance appears increasingly multipolar, shaped by competing interests, new technologies, and evolving economic strategies that reflect the aspirations of nations determined to secure their long-term stability. For the United States, the path forward will depend on its ability to confront internal vulnerabilities, restore investor confidence, and adapt to a changing world where the structures that once guaranteed its financial leadership are no longer as unshakable as they once seemed. This moment represents more than a period of economic uncertainty. It marks the beginning of a long-term transformation in which the global financial system is being rebuilt around new realities, new alliances, and new centers of influence that will ultimately define the next era of economic power. The transformation taking place across the global financial system is not merely a response to temporary economic pressures, but part of a deeper shift that is redefining how nations view stability, security, and long-term prosperity as they navigate an increasingly unpredictable world shaped by new power dynamics and shifting alliances. The United States, long seen as the anchor of global finance, is confronting a reality in which its traditional strengths are challenged by internal economic strain and external competition from nations that have spent years preparing for a more multipolar era. Massive debt, persistent inflation, and rising doubts about future monetary stability have created a level of uncertainty that complicates both domestic policymaking and international strategy. placing pressure on a system that once appeared unshakable. Meanwhile, China's deliberate and disciplined approach to building financial independence is influencing the decisions of countries worldwide as they reconsider the assumptions that have guided global trade and reserve management for decades. With each new trade agreement settled in alternative currencies and each shift in reserve allocation away from dollar-denominated assets, the foundation of the global order slowly tilts toward a structure that distributes power across multiple economic centers rather than concentrating it in one. Nations that once accepted dollar dependence as an unavoidable reality are now exploring new partnerships, resource deals, and financial technologies that offer them greater control over their own economic futures, signaling the early stages of a broader reorganization of international finance. This movement is reinforced by emerging regional alliances that prioritize local currencies, shared interests, and mutual protection against external volatility, creating pathways that allow countries to reduce vulnerability to global shocks and political pressure. At the same time, financial markets are responding to these unfolding changes with increased sensitivity as investors weigh the long-term implications of rising debt levels, currency diversification, and evolving geopolitical competition, prompting a shift toward assets that offer more durable protection against instability. In this environment, gold and other tangible stores of value are gaining renewed significance, not merely as investment tools, but as strategic foundations for countries seeking to safeguard their wealth in a world where economic systems and political relationships are in constant flux. As these trends converge, the broader implications become clear. The global financial system is undergoing a gradual but profound restructuring that will influence how wealth is stored, how trade is conducted, and how nations position themselves for decades to come. For the United States, the challenge lies not only in managing its domestic economic pressures, but also in demonstrating to the world that it can still provide the stability, confidence, and leadership that once defined its role in global finance. For China and other rising economies, the opportunity lies in shaping a new system that reflects their own priorities and visions for the future, one built on diversified reserves, strategic assets, and a network of partnerships that extend far beyond traditional spheres of influence. The world stands at a turning point, where the choices made by nations today will determine the balance of economic power tomorrow, reshaping the global order in ways that are becoming more evident with each passing year. As investors, governments, and institutions adapt to this evolving landscape, it becomes clear that the era ahead will be defined by competition, innovation, and a reevaluation of long-standing assumptions about what truly drives economic strength. The shifts now underway mark not the end of one system, but the beginning of another, and the nations that recognize these changes and prepare for them will be the ones best positioned to thrive in the emerging financial world that is taking shape before our eyes.